this whole webinar. So we try to go through, and then as we're going through, we'll ask questions where you can comment in the chat. So make sure if you can see the chat, go ahead and be able to comment there. We do like to see your faces just because when we go and we help you buy a house and we're at the closing table, we're like, hey, we remember your face from our webinar. And then, so we do allow questions. Sometimes if I know I'm going to touch on it already, I might wait a minute before I answer any questions, but it is interactive and we are like real people and we do really just want you guys to learn. We get a lot of really good feedback on this webinar. And so Denise, what was it, something that they were telling you like, oh, about the webinar the last time? Make sure is she talking? Unmute.
So it's super excited because we're going to close with her tomorrow.
Oh, start
And
over because you were muted.
it's super excited because we're going to close with her tomorrow. And I'm so happy. So she's unfortunately her husband passed away and she has three kids and one of them is autistic, the little one, and he related so much to me because I have Jonathan, 11 years old, and he's also autistic. And anyways, long story short, she used another lender that was an online lender. We put an offer on a house, and towards very close to the end, for us to close, I'm telling you guys, like 2 days before, the lender told her that she could not be approved to close on the house. She was devastated. She's like, I don't know what to do. So she came to our webinar. She saw everything that we explained. She called me and she's like, I wish every buyer join the webinar before they buy the house and go to a different round. And then Daniela was phenomenal. She was able to increase her credit score in such a short period of time, less than 20 days. And we're going to close. She's going to close. She's going to buy her dream home, a pool house here in Palm Coast. So I am so excited. It's going to happen tomorrow, guys.
Yeah, yeah. All right, so we will get started. Is everybody in and ready to go?
Let's
Everybody
go.
good?
We are ready.
Okay. So, just a little bit about me, not to bore you too much, but actually from Michigan. I moved to Florida in 2000, and I have about over 20 years in the industry. I'm a mortgage broker, so that is a little different than might see Rocket Mortgage or I don't know, like Wells Fargo or Loan Depot, something like that. Those are retail lenders. So as a mortgage broker, I have access to multiple lenders, and so I can get wholesale pricing. I have 5-star reviews. Many times I can close in 2 weeks or less, and I will connect you with trusted professionals. So I've been doing this a long time. So I have a list of professionals like realtors, movers, inspectors, homeowners insurance, pretty much you name it. Anything pet friendly, anything pet related, I have all of that. Groomers, trainers, all of it. So, one of the things, if you use me to close, I'll offer $150 towards pet adoption to a local rescue or pet training. Denise.
I'm Denise Fernandes. I'm here in Palm Coast for more than 21 years. Been serving the community, being part of a few charities. I have two boys. One is Joshua, another one is Jonathan. And I came from Brazil when I was 18 years old. And my passion is to work with first-time home buyers. The reason why, it's because when I came to America, I thought I could never own a house, that I would be impossible to own something in America. After a few years, it became a reality to me, and we own, thank God, several homes, and it's possible. It really is possible. And my goal is to help those that think that it's impossible to have a house, and that's my passion. I have other business, but my focus is really to focus on first-time home buyers.
So, introduction to home buying is we're going to talk about how to prepare, how to get pre-approved, what lenders look for, and costs, inspection, appraisals, and closings. Home buying, just a quick series of events, kind of like an overview picture. You get a pre-approval, you meet with a realtor, you look at homes, you go under contract, you submit a deposit, you get a home inspection. You secure your homeowner's insurance, you pay for the appraisal, you meet all the lender's requests, you get what's called a cleared to close, you wire your money to the title company. A lot of people think that I, as a lender, like you send the money to me, and that's not the case. You actually send it to the title company, and then you close on your new home. Um, Buying benefits, there's so many of them. Um, you have no more rent increases. You build equity and long-term wealth. You own it. You can use equity to move up. So a lot of the time, like I want to mention, oh, I want to buy my dream house. So if you're a first-time home buyer, you might not be buying your dream house, but you can buy a starter home, and then in 3 to 5 years, you're going to have equity to buy your next home. So we'll get into that. There's write-offs, so you can write off mortgage interest and property taxes. You have stable and predictable monthly payments, freedom to remodel and personalize, better quality of life. So if you're looking for more space, privacy, or a yard, no pet restrictions, and you are creating generational wealth. So there are so many benefits to being a home buyer. This is a really big one. Not all pre-approvals are created equal. So I'm not sure if everybody heard Denise's how she had that experience, but I myself also had an experience that I'll share. And so just to tell you, it was a first-time home buyer before, and I just really care about people, and I'm very honest and very upright. Like I'm just going to tell you exactly how it is, okay? And so I had a realtor, it wasn't not Denise, send me a client. And she's like, oh, this lady was pre-approved with a different lender, but we can't get a hold of the lender. Like they won't call us back. They've completely ghosted us. And it was like a internet lender or somebody, I don't know. And she's like, and I had the lady fill out the loan application. And you guys, she should not have been pre-approved. She was reload. So number one, she had to sell her house in Tennessee. Number two, she wanted her primary residence to be here in Florida, and she didn't have a lot of money after she sold her house, so she had a low down payment. So that doesn't work for an investment property. And she didn't have income here yet because she lived in Tennessee. She didn't have income. She didn't have retirement. She didn't have any employment, anything. So I couldn't even, and they had a lot of debt going on and on. There was absolutely no way that I could pre-approve her without, I'm like, you need employment here. I need a job offer letter. You have to sell your house in Tennessee or at least have it be under contract. And they had no idea. That lender sent them a pre-approval. They were under contract in a house and they wouldn't have closed. So then that affects realtors, buyer's agent, seller's agent, the client themselves, the seller, and whatever is happening with them, So I will issue a pre-approval that I don't feel very confident that it can close. So that's just to say that not all pre-approvals are created equal. If you go, online or something like that and just throw in your information and get some kind of pre-qualification letter, sometimes that doesn't mean anything, unfortunately. And kind of just, I'm not going to go over all this, but on average, borrowers working with a mortgage broker save over $10,000 on the life of on their loan. So this is a link. If you want me to include that, I will send that to you or reach out to me and I'll send that to you as proof. And the reason for that is again because we have the wholesale pricing and because the other lenders are shopping for our business. So that's why we can offer better pricing for clients. The other thing I like to mention is us as like mortgagers, we are everything that I do and other people are it's all on word of mouth. We don't have that large marketing budget like those online lenders or large banks. It's me, you know? So it's all on word of mouth. And I'm the one, this area that I run into my clients, and including customers and realtors. So you're not going to run into an internet lender, and they know that. That's why they don't really care, if that makes sense. So, cool stuff you can do as a homeowner. So, this is a scenario. So, if a purchase price is 300,000, after 5 years, an average, so just in general, nationally, home prices increase 5% every year. They fluctuate throughout the whole United States, but all throughout on average, it's about 5%. So after 5 years of a 5% appreciation, the appreciation gained is so you're then it's the house is worth 382,884. So appreciation gained is $82,884. So after just living there and paying your normal mortgage that you have to pay anyway, whether it's mortgage or rent, you've made yourself $82,000. It's really a no to own a home. When you're renting, landlord is the one that's building his or her own equity, not you. So a couple things that you can do with your equity, you can, like I mentioned before, you can open up a home equity line of credit to build a pool or remodel a kitchen. You can maybe add on an in-law suite, things like that. Your house becomes a financial tool, not just a place to live. As your home appreciates and your balance drops, you may be able to refinance, remove your mortgage insurance, lower your monthly payment. You can pull out, that equity, maybe put it down on another house, or you could list your house for sale, take that equity and buy a bigger house. There's just so much that you can do as a homeowner. Um, Real estate is a way, it is a tool to create wealth. Does anybody have any questions so far? Is everybody with me? Give me like a thumbs up or a yes in the chat.
That's awesome. And we also gonna have giveaways at the end, guys. Just stick with us.
Awesome. Do you guys have any questions so far? Okay, I'm going to keep going. So, factors that affect your loan approval are credit, income, liabilities, and assets. So, what is your credit score? Do you pay your bills on time? So, do you have collection accounts or charge off? When a lender looks at pre approving somebody, they don't just look at one, it's like a pie, and every credit is a piece, income is a piece of the pie, liabilities is a piece of it, and assets. So it's everything there. It's all one whole thing. And so it's not just about credit, it's not just about income, it's about all of those pieces. Okay. So credit is a big thing. It is important because the lender is looking at how you pay your bills, and that's how they base the risk. So if you put yourself as a lender, well, if I'm going to loan somebody $300,000, I need to look at their credit score to see how they pay their bills. And then, well, they kind of don't, so I'm going to increase their interest rate to cover them, the lender's covering themselves. So your credit score, the lower your interest rate. If you have a lower credit score, your interest rate is going to be higher because of your risk. Income, that's a big one because it has to be provable, reliable source of income for 2 years. So this is overtime and commissions, self-employment. All of it has to be provable and reliable. Provable means it can't just be cash that's underneath your mattress. It has to be sourced, has to be in a bank account, it has to show pay stubs, tax returns. Um, and then if with overtime and commissions, we take an average of what that overtime from your paycheck and your commissions, if you know bonuses, the average for the 2 years. There are a lot of people that are self-employed, and all of us that are self-employed, we don't want to pay a lot of taxes, so we like to write off all of our expenses, and then we only pay taxes on that income that we earned, right? Which makes sense. But we see a lot of the time with self-employment that they write off all of their expenses and then they don't like to show any kind of income because then they have to pay taxes on that, which I understand. However, when you're looking at purchasing a home, then that shows us as lenders that you don't have income because you have you made gross sales, minused out all of the expenses, and then you have zero income. So we do have other options for loans for self-employment, like bank statement loans. What I will get to that. I will get to the interest. Oh, 1 second. And so there are options for self-employment, but what shows on for liabilities, what shows on credit report that you have to pay. So liabilities are, what are showing on your credit report. It's not necessarily, utilities and FPL and water. That's not what we're looking for in that. And then assets are, do you have enough money in your checking, in your savings, in your 401k, your life insurance accounts for your down payment and closing costs? That is what lenders are looking for. They want to see that's what assets are. So when a lender or myself are, I said, what are you assets? They want to know what you have in your bank account, or stocks or anything like that they just see. A lot of the time too is lenders don't want to have you completely zeroed out. When you buy a house and you've paid your down payment and your closing costs, they don't want you to have no money at all. They want you to have some reserves. So they still want you to have some money somewhere, whether that's in a bank account or a 401k or stocks or, something like that. Now, let's see what credit score. Well, I will go over that. I'm going to get to that in just a minute. And do I help with credit? Not really. I do very minor, with credit. I'm not a credit repair professional, but I have worked with a lot of people. If there's little tweaks and things here and there, I've varies from like 400 credits up to, 850. At a 400, if there's a lot like that, it's probably too much. It's a little beyond my scope. If it is, just a little bit, like, you're in the 500s or 600s, I could probably help you a little bit with that. But I don't do where they do like the letters and stuff like that, like certain credit repair specialists. I don't send those out. So to like just go through disputes and stuff like that, I don't do that. But I will tell you what you need to do. All right.
And I just want to let you guys know, not everybody who comes to us is ready.
Yeah.
And Daniela does the video and explain for each person each scenario that the person is in. That's why it's so phenomenal, because there's lenders out there, trust me, that they charge to do that work. They charge to check your credit score. They also charge to help you get there. And Daniela does not charge anything.
Marlon, the maximum debt to income ratio, it depends on the loan and it depends on your liabilities, depends on the loan type. So that's not the one answer question. Types of home loans. So we have conventional, FHA, condo, special financing, VA, USDA. Conventional is as low as 3 to 5% down if it's a primary residence. Typically a 620 credit score and up. FHA, so conventional is, and then the conventional debt to income is 50% or less for DTI, debt to income ratio. FHA is 3.5% down. It's a little more lenient. It goes up to a 55% DTI. At a 580 credit score is the minimum. 500 credit score if you do 10% down. and then reserves are required, and the 500 with 10% down is only a 45% DTI. So I very rarely do anything with the 500, because if you're going to pay 10% down, then you probably have enough money that you can work on your credit a little bit and get your interest rate or get your credit score higher, get your interest rate lower, and pay the 3.5% down. Interest that you would be paying on with a 500 credit score would be insane. Condo financing is, again, for primary residence is 3 to 5%, and just for monthly HOA. If you get a pre-approval from a lender and they didn't calculate any HOA in there, sometimes it can make your DTI go over. So a lot of the time, for example, you might have a pre-approval for 350 for a single family home, but then the HOA itself is $500 a month, and you're gonna go way over. So you got to watch for that, or make sure that your lender knows, how much the HOA that you're kind of looking at. Special financing, so like renovation loans are getting more popular. Renovation loan starts at 3.5% down, and that can be like where you include, maybe you found a house, Denise found a house for, you were working with Denise and you found a house that needed a little bit of work. Maybe it needs a new roof, or you want to remodel the kitchen. You can include your regular loan plus those renovations. So that is an option. And then, of course, the special financing we talked about, self-employed, like the bank statements, there's jumbo, there's asset qualifiers. So if you don't have particular like work income, you can do, if you have a lot of like stocks and things like that, we can kind of go do assets for income. VA is for veterans, that's 0% down. And then USDA is 0% down. It is only in certain locations that are eligible. It is a lower debt to income ratio that's allowed, so it's a 45% or less. Sometimes, depending on the credit score, it could be 43 or 40. I'll be honest, a USDA loan is very hard to meet. I usually see that is coming, they need money down. They don't end up fitting in the strict in Central Florida area. Maybe in other areas, but nobody in the office has done any USDA in the last 10 years. Down payment. So you may has any put give me something in the chat here if you've heard that Hometown Heroes down payment assistance in Florida is back right now. Has anybody heard that? Give me a thumbs up or a yes in the chat. One person, nobody else is there? Okay. Yeah. So it's a great program. It's in Florida right now. It's for firefighters, teachers, healthcare, law enforcement, veterans, where you can get 5% of the purchase price. So everybody always markets 35,000, and it's not always the case. Um, so let's say you're looking at 400,000 for a house, 5% of that is 20,000. So, that if you did like a FHA loan, you could do the 3.5% down for down payment and then another 1.5 for closing costs. So the for the Florida Hometown Heroes, they choose the interest rate. So that's not anything that you can negotiate or buy down or anything like that. They choose what the interest rate is. There are household income limits. There are purchase price caps, and the minimum credit score is a 640. And then you can negotiate closing costs. That's what your realtor Denise is for, where she can talk to the sellers about negotiating some of your closing costs, which I will go over how much closing costs are. But it's very common and it is possible for you to get into a home if you follow under the down payment assistance, if you qualify, it is possible to get into a home with very low money down. The more you put down and the higher the credit score, the better the interest rate and the less the mortgage insurance is. Mortgage insurance is you do not need 20% down. If you pay, so mortgage insurance, anytime you pay less than 20% down, the lender is going to charge you mortgage insurance because they are considering you a risk. If you put 20% down or more, then you do not have mortgage insurance. When the mortgage insurance is covering the lender, it does not cover you. And FHA, they roll some of the mortgage insurance into the loan amount, and then they charge you monthly, and it never goes away. The FHA mortgage insurance is on for the life of the loan unless you refinance into a conventional loan. With a conventional, if you start with a conventional loan, after a while, once you get like 22% equity, then you can drop that mortgage insurance. Which loan type is the best for a first-time home owner? That's what you kind of work with me on, and we'll figure that out. We look at it because it all depends on what your credit score is. It depends on how much money you have to put down. It depends on what your liabilities are, so that is really my job to talk to because each person is individual. Um, and then I have some people that are like, I don't want an FHA loan because they know that the mortgage insurance is for the life of the loan and they don't want to have to worry about refinancing. So they specifically want conventional. So it just depends. A lot of the time when we get to that point, I'll give you like kind of two scenarios where in where you can decide how you want to do that. Money needed to buy a home. So I guess one of my kind of pet peeves are and I think maybe it's because I've been doing this for so long, and a lot of like new people will come out, and they just want, I feel like they're almost bait and switch. They're not fully transparent. And there is this misconception really out there that I get such a big difference. Either I have people that think that they can have a bad credit score, like a 400 or 500 credit score, and that they can buy a home with no money down at all. They don't need down payment. I just want to buy a home. I don't have credit and I don't have any money. So I have those people. And then I have people that think that they still need to put 20% down. So it's a little in the middle. And that's why we like to do these webinars because I really want you to know what the real story is. And I'm not, just trying to, I really want you to tell other people and just um, educate because this is real life and this is real information. We have a closing tomorrow. So this is real stuff. We're
Yeah,
not just
this is
trying to.
why we do this. I mean, the last webinar, as I was telling, a lot of people was not in the room. We're gonna close with somebody that was on our last webinar, which was just like a month ago. And we're gonna close tomorrow with her. And then we have a couple other people that were on the webinar and they're like, oh my gosh, I'm saving. I had somebody on the phone call. She called me right away the same time when we finished the webinar. She's like, thank you so much. I've been saving $100,000 because I thought that's what I need to buy a home.
Right. So it's
That's
like,
why we do
so
this.
this is why we don't, this is free. It's free information. Please tell everybody. We're trying to put these on as much as we can, just to get the right information out there because I feel like there's not. With that said, you can buy a house, like I just said, for very low money down, but you still have some money to pay. When it comes to buying a house, it does cost money. And so you do have an escrow deposit. When you find a house with Denise and you want to buy that house, now you have to put in a good faith deposit or earnest money. They have like three different names. It's all the same. So the seller wants to know that you're serious. So usually that down payment is usually 1% of the purchase price. So that means if you're buying a house for 400,000, typically a really good earnest money deposit is $4,000. Now, yeah, you could maybe negotiate for it to be less, but what if there's another offer at the same time? Your offer is going to look better if the seller knows that you have skin in the game and you're putting $4,000 down. You have a home inspection. Now, a lot of people have, so this is good information where a home inspection is not required by the lender. It's not required by me. But you need a home inspection. You need a 4 point and you need a wind mitigation for homeowners insurance, and if you're getting financing by me or any lender, you need to have homeowners insurance. So you kind of do need an inspection, but it's not technically required by the lender. But that in itself is going to be over $500, depending on the square footage. Sometimes it can be seven, eight, $900, depending, And then also there's lots of different types of home inspections that you can do. So it all just kind of depends on what you want. So you have that cost. An appraisal. Appraisal is required by the lender. And so that is really to cover you to make sure that it's a third party. I can't choose them. Denise can't choose the appraisal. It's like a wheel of fortune, and they just kind of spin it and they choose. An appraiser, they go out and they determine that that house is worth what you're purchasing it for. So they look at the comparables, they look at the whole house itself. So that in itself is over $600. And those prices are going up for appraisals. And so that's required. And then a survey. So if the seller doesn't have a current survey on the property, then you, as the buyer, have a survey. And that's like to cover the perimeter where the line is of your property and make sure that there's not any liens or anything or any issues on that line of that property. And so the closing costs, it can't technically be rolled into loan, but kind of. So we'll get there. Let me go through this part and then we're gonna touch on that. Dave, good question. So closing costs run 3 to 7% of the purchase price. So if you are, which we'll do an example, but fees paid, closing costs are fees paid at the day of closing by both sellers and buyers. So as a buyer, it's overwhelming when you have all of these costs and the down payment and then closing costs. And then this is another thing that people, realtors and lenders, they don't tell. All they focus on is the down payment. And I can't even tell you how many people that I talk to, and I'm like, well, you have to have your closing costs. What are closing costs? I didn't know I had closing costs. I thought I just had down payment. So closing costs, it costs you money. And then another thing that they think too is that they don't realize, a buyer doesn't realize that the seller has closing costs too. So the buyer is like, well, I can't pay that. I want the seller to pay my closing costs. Well, but the seller has their own closing costs, and typically they're paying the commission too. So you have to just that's why we tell you this information so you can kind of go in knowing all of that. Um, so with closing costs, you have the fees covered are prepaid interest, lender fees, taxes, title fees, and insurance. Those are all the closing costs. Then you have prepaids and escrows, 1 year of homeowners insurance we collect, prorated property taxes, 2 to 3 months of escrow reserves. That's taxes and insurance. And then prepaid interest is collected, interest from closing until the end of the month. So all of those are closing costs. Now, sellers paying closing cost, your realtor can negotiate this as part of your offer. If you need help with closing costs, your lender and your realtor must know up front. Sellers rarely accept both a lower price or a lower price, offer and paying buyer closing costs. So a lot of the time, especially in this market right now, there is still this a little bit of a misconception. And Denise, I'll let you speak on this a little too. If a house is, listed at 400,000 and then somebody's like, well, I'll offer 350 and the seller's paying my closing costs. That's a lot. So you're asking basically the seller to pay to 50, 60, 70,000, and that's unlikely in this market. It's going to be one or the other. Either they're going to drop the price or they're going to pay your closing costs. So you can't really expect both. Now,
Even though it's a buyer's market and it's really, really good to negotiate right now,
yes,
it's phenomenal. But gotta be realistic. The seller has their own closing cost. The seller's paying for the realtor's fee. Um, at least if you have a good realtor, the realtor is not gonna let the buyer pays for it. Sold more than 55 homes, not even one buyer paid my commission. But the law changed, and there is a law, and If you don't have a good realtor, you might end up paying for the realtor's fee. That's another story.
So the one of the questions was, can closing costs be rolled in? So what we do is, let's say you need 10,000 towards your closing costs, right? And let's say you're pre-approved for 400,000, and you can add that in. So if you, let's say the house is 390, well, you can add the closing cost to the purchase price. So you can say, let's offer 400,000. They're asking 390 plus 10,000. Then they pay your 10,000 closing costs. So you're pre-approved for 400, so you can offer them 400 and then they're paying 10,000. That's kind of how it's rolled in, but the seller's still getting their full asking price because they're paying. So you can roll them in that way if that makes sense. Does that answer your question, Dave? Hopefully. You can ask anything else in there if you want. Your first mortgage payment isn't due until the first of the following month after closing. With us, depending on the loan type and qualifications, you may choose no escrow account. That means taxes and insurance are not part of your monthly payment if you wanted to do that and pay for them separately on your own. And if you're, another note, if you ever hear people talking about that oh, my mortgage went up, or, I don't know what happened, but my mortgage went up. It's not like their interest rate went up, because once you close and you buy a home, your interest rate is locked. It can't go up. It's usually because the property was reassessed and the property taxes increased, or your homeowner's insurance went up. So here's an example. You have a house at 350,000. Your down payment is 3.5%. So that's $12,250. Your closing costs are somewhere between 6,000 to 8,500. And then you have prepaids and escrow of 5,000 to 8,000. So your estimated total with your down payment plus your closing costs and your prepaids is 27,000 to 31,000. Now, if you kind of consider 350 times 20%, that in itself is $70,000 plus your closing costs. So this is a better scenario where instead of having to pay 20% down, you only have to pay 3.5% down. Now, if you were to if you're looking at, let's say, 27,000, and Denise was to work out seller concessions, sellers to pay a portion of your closing costs, let's say 10,000, well, then you're looking at 17,000 that you're coming to the table with, as an example. If you were to get down payment assistance of 10,000, then you're basically taking 10,000 of down payment assistance plus 10,000 of seller concessions, and then you're at a new estimate of about 11,000. Now, something to consider is down payment assistance is you're getting a second lien on that property. You're not putting anything down really because that's being covered. So you don't have any equity going into this house. So if you turn around and decide that you want to sell it in a year, you're not going to have enough equity to cover as a seller, your closing costs and your realtor commission. And I say that because this has happened where clients are like, oh, well, I want to refinance. You don't have enough equity to refinance in a year because you use down payment assistance. Or, well, I want to sell. You don't have enough equity to sell. So I always want to be very upfront that if you're going to do down payment assistance, it's going to be the best to stay in that house 5 to 10 years. Because then within that 5 to 10 years, you have that 5% appreciation. And then you're going to have enough. You're going to have enough equity to because you have to pay that loan off, that second lien of that down payment assistance. If you refinance or sell, you're paying off the first loan and then that second down payment assistance loan. So you have to have enough to be able to do that. Does that make sense to everybody? Do you have any questions so far? Awesome. Thank you, Weston. Thank you. Everybody good? Give me a thumbs up. All right, so pre-qualification versus pre-approval is online application is about 10 to 15 minutes. And then it takes you about 10 to 15 minutes and we'll get back to you in less than 24 hours. That's where you put your income, your assets, you answer a couple questions, and you enter in your liabilities and your credit score. We're going to review your income, your assets, your liabilities to see if you meet the guidelines for that, whatever loan that we're looking at. And then we'll issue you a pre-qualification letter. There's no charge for this. If the application looks good, then we're going to move forward to a pre-approval. Now, pre-approval, when we get to that point, we charge now for a soft pull. It is a soft pull. It's not a hard pull on your credit, and it's $50 per person that you pay for that. So I don't ask you to pay for that unless based on the application that you submitted, that it makes sense. Everything looks good. Otherwise, I don't want you to pay if it doesn't look like I'm going to be able to pre-approve you. And then that's when you submit all your documentation. So your 30-day pay stubs, you can see that there. Eventually, when we go under contract, that we will do a hard credit pull, and that's not something that you have to pay out of pocket right then. It's part of your closing costs. And then we can do multiple cost worksheets. We can look at, sometimes we do different pre-approval letters, loan programs, different lenders. And then at this point is where we can offer minor credit help if needed. And then we do ask for a commitment at that point. And then that's when you get to that pre-approval, that's when it might take a couple days for us to verify all your documentation. And then you are good to go and ready to go looking for homes with Denise. And we do look at your price range, what's comfortable in your payment, how much your minimum down or how much you're comfortable with, your amount due at closing, the best loan program, the best lender, all of that. I go over all of that in detail, and I think Denise can explain that a little bit with her client that we're working on together. She was very aware of what her amount is per month, how much she had to come to the closing table with. She knew. Touch on this really quick. Zillow and online platforms, this is kind of just for your knowledge. When you are going on Zillow and you're looking at a house and you click contact agent or ask about a home or get pre-approved, your information is being routed to someone who paid for it. They're paying to be there and they're paying for your information. What happens behind the scenes? An agent paid for that lead placement. Lenders pay for that visibility. Your info is routed to whoever paid. You may be assigned as an agent, and then you may be steered to a preferred lender. So you're not really choosing what agent and what lender you want to work with.
And I want to touch one more time. It's very risky. So many times, because I only can suggest which lender you should use. But if a person comes to me with a pre-approval and I can recommend Danielle DeSousa and they say, no, there's nothing I can do on that point, and just finding them the house. Lot of scenarios, so many times from Zillow for mortgage, we were not able to close. Then we have to start the process all over again. Very, very painful for everyone, for the seller, for the buyer. It's very painful.
And I wish we could have like a loudspeaker. Say it louder for those in the back because people just don't know. And that's why we try to do this, just to educate so people do know, because there's so much information out there. How to build your team. So how do you pick? Well, so as like lender, realtor, insurance agent, inspector, mover, we all want you to succeed. Most of us are working on commission, meaning we do not get paid until you close. So your best interest is our priority. We want it to work for you. Ask for trusted recommendations. Read individual reviews. This is a big one. Don't just rely on big online companies. They paid for those reviews. Look at the actual name of the person that you're working with and look for their reviews. Local professionals do not cost more. They often have the same or better pricing. You save time with local experts because we know the market. They know the people in your market to get it done. Trust me. There's been so many times where Denise, we know the inspector, or we know the insurance person, we know the mover, we know the title company. There's been a lot of times where I've had listing agents text me and be like, when I saw that pre-approval was from you, I knew that this was going to close. Reputation matters because they live and work in the community, which I talked about. They can offer the same thing most of the time better than whatever the other online lender is offering. The online lender or bank or whatever, it's just a bait and switch most of the time, 99% of the time. What a realtor does and why you only need one. This is a big pet peeve of mine. There's so many I just had this happen recently. Just pick a realtor. And if you are working with a realtor and you feel like it's not jiving and there's or a personality conflict, even as a lender, just let us know. Hey, I went with somebody else, you know. But don't have this realtor and like call all these different realtors to show you different houses and because that's not fair. They're taking time away from their families and they're taking time showing out you all these houses and then you write a contract with someone else. They like somebody like Denise or any other realtor, they're not getting they have to still pay for their gas and they don't get paid to show houses and they don't get paid for those contracts. So just have that knowledge. You're working with multiple realtors doesn't do anything for you. They all have access to the same system and the same information. So just use one and they'll get you anything that you need to know. Understanding a realtor understands the market value and guides you in paying the right price. They are write offers, negotiate, manage contracts, coordinate showings, inspections, appraisal, access, timelines. They represent your best interest from start to finish. That is why you don't choose the listing agent on the house. You have a buyer's agent to represent you. The listing agent is representing the seller. So there's so much confusion, especially with this commission thing, that oh, well, I'll just call the listing agent. Then they're just charging you twice with both commissions. So it's not, you have to, and then who are they representing? They're representing the seller. And correct me if I'm wrong, Denise, but that's why you want to have a buyer's agent to represent you.
No, 100%.
Okay.
And I have tons of listings. And when a buyer walks in and want me to, I was like, no, I'm representing the seller because I want what is best for my seller at the end of the day because they signed a contract with me first. And that's exactly what happened. But the buyers comes in and they think they're gonna save huge amount of money because they are working with the listing agent. No, you just not having anyone represent you. That's all.
Yep. Same with working with builders. Take your buyer's agent with you. The selling agent at the builders, that is representing the builder. The contract price for that house already includes, it's not costing you more, it's already included. And if you don't have a buyer's agent represent you, that builder is just holding on, they're just keeping that money. It's already included. So take a buyer's agent with you so then they can actually help you. You only need one agent, one point of contact, clear communication. Commission is typically already negotiated and paid by the seller. Again, that is a touchy subject. That's something that you talk with your buyer's agent about that. Check with your realtor on that. You can request in the offer if it's not included. Using multiple agents can void representation.
Just a quick story. A buyer was about to sign a contract on new construction. He went to the model home and was about to sign a contract. And he called me and he said, can you take a look on this? Can you help me? Long story short, I said, you're not going to sign this. I'm going to negotiate for you because nobody did negotiate for you. He ended up saving $30,000 on that transaction. So you think you are saving going in and with the builder because the builder is going to give you everything? No. We were able to negotiate $30,000 less than the purchase price.
That's amazing. What are some of the biggest mistakes first-time home buyers make, and how do you help them avoid most of those mistakes? The biggest mistake is that they use an online lender or they use multiple realtors and they don't have a buyer's agent. I think that is, but once, and if they're already working with me And I don't, I try to not have them make mistakes, right? Which we'll get into, but it's like don't buy credit, don't move your funds, don't buy furniture before, which we'll talk about that. But I think that it's just the lack of knowledge and not getting educated enough. And then too, sometimes like I'll try to take those extra steps, like if you sometimes they go too fast. Um, it's like all of a sudden I want to buy a house. Like they don't plan, and maybe they're sellers. I have to sell now, and so then they're running around and they're renting, and they have to hurry up. And they didn't really think about it of wanting to buy, so there's a little bit of a rush there. So that might be considered a little bit of a mistake. I would recommend taking some time and preparing yourself before buying. But resale versus new construction. Resale, I won't get into this too much, but don't just discredit resale and just go straight to new construction because these homes they've already proven themselves. I've heard recently a lot of really crazy new construction stories like leaks and mold because they didn't let the foundation cure and really not good things. So, you want to always make sure that you're getting an inspection with a new construction. And I just highly recommend to not discount resale homes right now. Plus, there's a lot of negotiation power in that. And then don't discount necessarily construction to perm. So I do have that loan option where you can use like a custom builder and you can choose their floor plan or choose your own floor plan and land and wrap it all into one loan. So if you wanted more information, you can get with me on that. Foreclosures and short sales. This is a big one. Foreclosures are bank owned or auctioned properties. They're priced low to spark bidding wars. Banks take the highest offer, not the best terms. No repairs, no closing costs, no negotiation with foreclosures. Homes may have unknown damage or have sat vacant for long periods. Appraisals and inspections are non-refundable, so you can lose out on that money. Closing can take 3 to 13 months and best for cash investors, not financed buyers. Short sales, seller owes more than the home is worth. All lien holders must be approved, can be very long timelines. They're sold as is with no repairs, no closing costs. Financing buyer, they face a lot of delays and a lot of uncertainty. Many buyers confuse these with active listings. So on Zillow or Redfin, uncheck your pre-foreclosure box because pre-foreclosure does not mean that the home is actually for sale. Denise, do you want to add anything on that?
Yeah, 100%. And most of the times is cash. So it's people come to me and say, "Oh my gosh, I saw this house," and I have one on short sale, guys, that it's been on for 8 months now. So just keep that in mind. The shiny object, I'm gonna getting a really good deal.
And you might
Maybe
not
not.
because then you're just going to sit there for another year. What happens when you find the one? So you make an offer, you pay your escrow deposit, you get your inspection, which is non-refundable. You have an appraisal that's non-refundable. Your loan process begins. You send the contract to the lender, underwriting. We are going to verify. The lender verifies all your income, your assets. We're going to probably request additional documentation, which is normal. Source all the funds and verify any gifts. Explain any credit inquiries. Final steps, you secure your homeowner's insurance. We do the appraisal's been done. We do the title work, and then we get your clear to close, and you schedule your closing. So do's and don'ts during contract. Don't apply for new debt such as credit cards or vehicles. Don't co-sign on another loan. Don't allow multiple lenders to run hard credit inquiries. Don't move money around between accounts. So these would be kind of that answer of mistakes that buyers. So we try to we always tell people when we're under contract these things as well. Don't change jobs. Don't wait to the last minute to select your homeowner's insurance. Don't buy new furniture. Frequently ask questions. How long does the home buying process take? usually about 30 to 90 days. How long does the closing take? Usually 25 to 35, depending on inspections and appraisal turn time. Can close usually in 2 weeks if needed. Can I buy if I already own a home? Yes, there are options. You can rent out your current home or you can sell and buy. Just kind of depends. Can I buy a manufactured home? Absolutely. We can do manufactured home loans. We can also do manufactured home loans in mobile home parks. And we can do new construction manufactured home plus land. So, yes. Is insurance higher in Florida? I get that question a lot. Yes, it can be, but taxes are often a lot lower. Can I use gift funds? Yes. Parents helping adult children is very common. What if my credit needs work? We had that question. We go over what you need to do and educate you. If it's beyond our scope, we will refer you to credit repair specialists. Wanting to move up, you can pull equity from your current home by taking a HELOC, put that in a savings account. You would have to qualify for the mortgage and the HELOC. Anyway, yes, that you can move up. How long does my pre-approval stay active? With us, you just update. I'll keep it active if your house, if you're house searching, as long as you want me to. We might just need you to update your bank statements, your pay stubs. As long as your financial situation hasn't changed, we'll keep it open as long as you're actively house hunting. All right. Any questions? What's one thing buyers often don't realize a great realtor does until they have closed on a home? Bailey Douglas. Denise, do you want to answer that? What's one thing buyers often don't realize a great realtor does until they have closed on a home?
They don't realize what is go behind the scenes, right?
Yeah.
They don't realize that they don't realize how sharp you gotta be to negotiate a home. And I wish it was an easy question, but it's not. A lot of people tell me like, "Oh my gosh, I cannot believe you negotiate this house for me." So yesterday we put two houses under contract, and the buyers was ready to pay full price because it's his dreams house. And then I was like, no, no, we're not gonna pay full price. We're gonna ask 30K less. He's like, wow. It ended up saving him like 20K. But anyways, that's what we do behind the scenes. That's what I'm really good at it, is to negotiate with the seller. And I can guarantee you guys, the buyer's never gonna pay for my commission. It's just not gonna happen. Not with me. So
Now, we do ask, so we ask you to leave a Google review for us, and which we can put those links in, but we'll send you an email, all of you, an email with all of our links, and we ask you to leave a Google review about the webinar, and then in return, we will give you a download free that you can do 7 steps to prepare for home buying and 10 steps to prepare, 10 steps to home buy, and a down payment assistance guide. So, 3 free guides for the Google review. And we're going to do a drawing, right, Denise?
yeah, I'm ready. Who's ready?
So we have a drawing. We're giving away a $25 gift card, just a regular MasterCard, Visa, whatever. And so whoever wins, we will reach out to you and get your address and all of that and mail that to you. So let's see who's the
Drum, 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 drum. And my dogs are barking.
winner.
So the winner is Tyler Brown.
See here still, hopefully.
Not sure, but we get in contact with him.
Awesome. And then I have one more special to share. So this is big, you guys. I haven't offered this before. What I will do is anybody that uses me to close on your home this year, I will basically pay for your appraisal. It is a free appraisal voucher.
Wow, that's awesome.
The value is over $600, and I will send you the link to download. And basically, if you go under contract, just send that to me. Remind me, hey, I was in your webinar. And you will pay for the appraisal upfront, and then we will make sure I will credit it back to you at closing. So it will be free for you. Okay? Is that awesome? Hey.
Yeah.
I think that was it. So these are our links, the DeSousaTeam.com if you want to apply. This is my calendar link that if you wanted to book a call, and then social media. And this is for Denise, all of her links too. And we have been listing those in the chat and as well. Done. And but if there, I know patients, you have a question which I will answer, but I wanted to at least allow anybody else, if they want to, if they have stuff to do, they can head out. But anyway, from here, you can, we'll sit and answer any questions that you have. So thank you everybody for joining. And anybody that wants to ask Denise and I any more questions, you can stay on and we'll hang out and answer any questions that you have. Like I said, we will send all of the attendees an email with our links and and those other flyers that we'll send that to you. Okay? Sound good?
Thank you, guys.
So patients, you had a question. Can you go over more self-employment requirements for pay stubs income? So basically with self-employment, there's two separate ways. Either you can do, if you're self-employed, it all depends on what you're claiming as income on your tax returns. So we can take the tax returns and use that income to qualify you. Um, if you are not claiming income on your tax returns, then you can do a bank statement loan. That's where we, as long as you have owned the business or been in business for 2 years or more, then we can do a bank statement loan. And that is when we basically take 12 to 24 months of deposits of your bank statements. We average all of those deposits out. We subtract 50% of expenses, and then we use that as your income. And then usually, like a profit and loss statement, will have to match that for that income, or like a CPA letter. And then we can use that instead of your tax returns. The only thing with a bank statement loan that I always let everybody know is with that, the credit score has to be a 680 or higher. And then the down payment, I'd have to look because every lender is different, but it's usually 5 to 10% down. So it's a little bit more. If you did the 2 years of tax returns, then if depending on what the income shows, you could do like a lower down payment, like, or down payment assistance, but you can't do the down payment assistance or like a 3% or 3.5% with, if you don't do the tax returns. That doesn't work on a bank statement loan. Does that answer your question? Okay, cool. Anybody else?
Anybody else has any question?
Well, we have
All
our
right,
winner. We have
guys.
the appraisal voucher, and we have our links. So everybody look for your emails and we'll send those out to you.
Everyone.
All right. Bye. Thank you.